Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to talk about how much you really pay for a mortgage. Now, one of the things that I always like to ask people, especially if they're interested in buying a home or real estate, I just ask them a simple question like, hey, if you were going to get, let's say, a $300,000 home, let's say like, you're able to finance the whole thing, no down payment, would you get a 3% interest loan, right? And what do you think most people say? I get a few things. First of all, I was like, definitely, yeah, that's a great rate, 3%. Interest rates nowadays are like 6, 7, 8%, right? So 3% is fantastic. Of course, they'll definitely do it, right? Second question is, I don't know. I've never bought a home for us. I don't know if it's good or not. And then I just ask, okay, like, well, do you think that that's a low number, 3%? And look at the monthly payment, $1,200. So if you take a look right here, 1,265. I mean, that's the cost of that mortgage is less than, let's say, like I don't know, a one bedroom in the heart of the city of Atlanta, right? So why wouldn't you do it if you're, let's say, get a 3 bed, 2 bath home in maybe a suburb in the Metro Atlanta area? I mean, wouldn't you want to do it? Pretty much everyone will say yeah, right? Everybody will pretty much say yeah. So I say, okay, next question. Have you ever done the math? So what's the math? Well, basically, all you have to do is just multiply this by 12 months and then 30 years to figure out how much you're paying in total. So yeah, let's just do the math, right? So let's just say monthly payment is 1265 per month, right? So it's just 1265 per month. And then how many months in a year? So that'll be 12 months per year. And then how many years in the mortgage? You just do 30 years in the mortgage, right? So I just ask them, hey, like, let's just do a quick calculation. Here's the secret. I never tell them like, hey, this mortgage, 3% mortgage is a good or bad thing because I wanted to come out of their mouth whether they think it's a good or bad thing. And you'll notice that even in this video, I haven't told you if it's good or bad, right? You probably saw in the thumbnail, like, well, if you're paying 50%, then of course that's bad, but just assume that you never saw the thumbnail and we're talking for first time. All right, so let's just do the calculation. And I just asked me, hey, just do a quick calculation for me. Times 12 times 30, and that's 455, 400. 455, 400. So that's the total payments after 30 years, right? So when that 30 years is done, you paid $455,000, and the original loan was $300,000, right? Now, if you want to calculate the bank's profit or even or the bank's rate of return, you can do that as well. So the first one is just a pure number. It's just 455, 400 minus 300,000. Whoopsie. And let's just do that. So minus 300,000, and now just see 155, 400, right? 155, 400. So let's just do 155, 400, right? So that's the bank's profit of total interest because that's how they make profit. The bank's rate of return is that total interest divided by the amount that they invested, which is essentially their loan, right? So total interest divided by total loan, or the original loan, we'll say that. So how do you calculate that? Well, that's basically 155, 400 divided by 300,000. So 155, 400 divided by 300,000, and that's 51.8% profit. So it's not even a 50% profit, it's a 51.8% profit at a 3% interest rate. And now some of you might be shocked if you've never seen any of our other previous videos. But I remember the first time I learned this, and in fact, I wasn't even trying to learn about mortgages because back then I was totally clueless on how anything worked. I was, everyone was like, hey, you can learn about velocity banking. Here's a class to learn how to pay off your mortgage in 5 to 7 years. And I was like, get out of here, right? But then I still took it anyways because it's like, what do I have to lose? Even if the course is like $1,000 or $2,000, if people say I can, pay off that mortgage in 5 to 7 years, sure, maybe I'll learn it. But what I didn't know is how much banks make in profit even at 3%. I didn't know that part. I was blown away. That's the part that blown away. And I know there's a course that we offer here too, where we offer landlording courses, but there's an instructor who actually says like, don't be the landlord, be the bank. Because think about it, if you're the bank and one of your home borrowers or borrowers of the loan for the home um, needs a repair, does the bank ever do anything? No, they just keep collecting money. But landlords, if their tenant has like an issue, maybe a toilet is broken or clogged, does the landlord have to do something? By law, they do, right? So it's just like, oh, they're just collecting money, doing nothing, and making all this interest, even at a 3% rate. And so let's say like all they did was give out like 3% mortgages to everybody, right? But that's like hundreds of millions of people. So 50% profit of hundreds of millions of people at a 3% rate. And again, that's if you're lucky, if you have 3%. So if you had 6%, it's like kind of like double that, right? Almost, but not really. But it's almost double. But you can see that they're making a killing. So it's kind of like, would you want to be in this situation? Would you want to be the borrower? Would you want to borrow that money, or would you want to be the lender? I'm thinking, man, it's pretty sweet to be a lender. Who cares about being a homeowner if I'm making a 51% profit? But because home ownership is like the American dream, people will like overpay and then they'll like, where'd my money go, right? So you can kind of see if you use the free version of Excel, you can get it on live.com, and you can get this free mortgage calculator too. You just type in some numbers and you could see like, hey, play around and you could easily calculate the total interest. So the interest rate, let's say it's 3%, right? And then if you look here, this is $51,000 of interest, so it's 51%, right? So same thing, regardless of how much you're paying, if you put like an extra zero, then all there is like an extra figure in right here, right? So pretty insane of just 3%. And if I put a 6% here, whoa, what is that? 100? Oh, geez. Oh, I put 600%. Well, a little crazy here. Hey, wait a minute. What did I do? Oh, I did this wrong. 600. No thanks. All right. So as you can see here, 6%, I got 115% of interest on my money after 30 years. And think about this. This is actually a realistic situation in San Francisco, right? Markets like New York, San Francisco, even like Oregon and Irvine, California. This is a totally realistic situation where you pay $1 million from a home and then you'll pay like another $1 million in interest. Like, isn't that insane? 6%, 3%. It's all insane. And then once you do kind of do that calculation with most people, they'll be like, whoa, like I really have to pay off my mortgage early. And that's kind of like the light bulb moment for me about why I have to pay off my mortgage early. It's not about just paying it off in like 5 to 7 years. It's about saving all that interest. Like you're not double paying for a home. All right. So this is Crain Atlanta Mentorship. If you're interested in joining our group and learning more about these things like velocity banking, mortgages, etc., real estate investing, go ahead and click the link down below. And also, you can go ahead and find out our email address at the About section of the YouTube page and email us there if you're looking for more info. All right. Have a great day, everybody.